Hello and welcome to today's video. First of all, Merry Christmas to you all, and now on today's video. So today I will be covering new interesting protocol on Solana, which is still in its beta stage, which means it is still early, so participation now could result in interesting rewards like airdrops in the future. The protocol name is Lince Finance. Before we start, disclaimer, nothing here is a financial advice, I'm just one person with a microphone, always do your own research. So DeFi has long been viewed as one of the most promising real-world use cases for crypto beyond Bitcoin's role as a store of value. Its core appeal lies in the ability to put idle capital to work instead of letting money sit in a bank where inflation slowly erodes its purchasing power. DeFi allows users to earn yield directly on their assets. Over time, DeFi has evolved significantly. What started with relatively conservative strategies such as lending and borrowing stablecoins has expanded into a much broader and more complex landscape. Today, users can gain exposure to crypto assets, provide liquidity, loop positions, and use liquid staking derivatives, all in pursuit of higher yields. While these strategies can be powerful, they also introduce additional layers of risk and complexity, which can be overwhelming, especially for newer participants. So what is Lince? Lince is an investment platform that automatically puts your money to work on crypto, with an investment strategy tailored to your risk profile. Lince helps users select an investment strategy, and when you log into the first time, you are asked a few simple questions designed to assess your risk tolerance. Based on your answers, the protocol suggests a suitable strategy, which you can always adjust later if your preferences change. Once a strategy is selected, the process becomes pretty straightforward. You deposit your funds and the algorithm automatically deploys your capital across DeFi protocols, handling execution and management on your behalf. This allows users to gain exposure to decentralized finance without needing to actively manage positions or navigate complex strategies themselves. How does it work? After you deposit your funds, Lince automatically allocates and diversifies your capital across various protocols. The exact distribution depends on the strategy you choose, which is directly tied to the level of risk you are comfortable with. Lower risk strategies focus on more conservative deployments, while high risk options introduce greater exposure in exchange for potentially higher returns. In both cases, Lince handles the diversification and execution for you, allowing your investment to be actively managed according to your selected risk profile. The strategies employed by Lince makes use of a range of DeFi mechanisms, including lending, liquidity providing, staking, arbitrage, and looping. By combining these methods, the protocol is able to construct diversified strategies that aim to optimize yield while aligning with the user chosen risk profile. Now let's look at some strategies to understand what's behind them. So on the left you have example of Sentinel strategy. Its approach is conservative and primarily focused on stablecoins, meaning there is no direct exposure to broader market price movements. As a result, this strategy is designed to be more resilient during market downturn, and it is not directly affected by crypto market crashes. On the right side you have the Balancer strategy. At this stage the strategy expands beyond a pure stablecoin approach and introduces exposure to major crypto assets such as Bitcoin, Solana, and Ethereum. While this opens the door to potentially higher yields, it also means the strategy becomes sensitive to market volatility and is exposed to broader market corrections. Now onto some risks. So investing, especially in crypto, inherently comes with risk, as the decentralized protocol Lince Finance is no exception. One of the key considerations is smart contract risk, as bugs or vulnerabilities may exist within the underlying code. While audits and testing can reduce this risk, they cannot eliminate it entirely. There is also market exposure risk. Crypto assets are known for sharp and sometimes sudden price corrections, including major assets such as Bitcoin. Depending on the selected strategy, users may be exposed to this volatility. Additionally, Lince deploys capital across various DeFi protocols, which introduces protocol risk. Any issues, exploits, or failures in those external platforms can impact performance. Strategies that involve liquidity providing may also face impermanent loss, while leverage or looping strategies can be subject to liquidations during periods of high volatility. Understanding these risks is essential before committing capital, as higher potential returns accompanied by increased complexity and exposure. Lastly, even though no airdrop has been officially announced, Lince has already launched a leaderboard with Season 1 currently underway. This typically signals that early participation may be tracked and potentially rewarded in the future, possibly in the form of an airdrop or other incentive, although nothing has been confirmed. The protocol is still in its early stages. Access is currently gated throughout invite codes, and regular users, excluding ambassadors, are limited to a maximum of 3 invites. Personally, I'm currently using the Sentinel strategy, which follows a conservative approach focused on stablecoins and carries no direct market exposure. For now, this fits my risk appetite well, and I plan to gradually scale in it as I become more confident in the protocol and its execution over time. So some closing thoughts. I really like the idea of one-stop hub for everything DeFi. And it looks to me Lince is trying to do that, to simplify usage of DeFi tools for existing and new users. And if we want to grow to become commercial one day for public, I think this is a good step in this direction. Because simplicity is one of the main attributes that attract users. You go to Lince, deposit your funds, and the protocol smart contracts does the complex jobs. Sounds nice in theory, but time will tell how it performs in practice. If you're interested in earning yield on your stablecoins while also positioning yourself for potential future airdrop and improved market conditions, you can use my referral link that is in description of this video. Okay, this is it. If you want full deep dive, check my Substack. Also, if you want more daily insights and market updates, check my X account, and for more educational content, check my website. Links for everything will be in the description of this video. Like, subscribe as a sign of support, and see you in the next video. Bye.